So in tonight's lesson, I'm going to be teaching you some of the basics to a unique trend reversal strategy that I've created. With this trading strategy, you're going to be able to confirm when a stock is going to have a reversal. Once you confirm that it's going to have a reversal, you can buy call options towards the lows, and you can buy cheap, far out of the money, low risk options, and you could sell them deep in the money for the biggest percentage gains. Now with this overall trading strategy, if you use it successfully, you can have over an 80% win rate using the strategy. So in terms of the terminology of this overall trading strategy that I created, you have to go back throughout the channel, man. So in terms of this throwback, this was during 2020, and this is when I was telling investors to buy Sava stock at $2 a share. I also told investors to buy Zoom at $50 a share. I also told investors to buy Moderna at $50 a share. But yeah, this is me showing you exactly how to use this unique trading strategy that I've created. As a matter of fact, I ended up using this strategy on a Friday at 2:23 p.m. to buy SPY 532 calls at 78 cents a contract. And then at the speed of light as a day trader, I ended up selling those call options for nearly a 100% profit return. I'm going to be breaking down that trade for you step by step, teaching you the strategy. You can use this strategy as a day trader. You can use this strategy as a swing trader. You can use this strategy as an investor. My main preference is using it as a trader. With that being said, I'm going to walk you through the terminology and some of the basics. Let's get straight into it.
This is Sava stock. This is a stock that correlates with the PCP strategy.
So the PCP, that's the previous closing price, and we're looking for confirmations at reversals at these gaps, man. So you can call it a gap close reversal. You can call it the PCP strategy. You can call it the PCP reversal strategy. You can call it the gap fill reversal strategy. With that being said, we're simply identifying certain levels at gaps that are likely going to have a reversal. And once we determine these levels in the gaps that are likely going to have a reversal, we wait for specific confirmations of a reversal, right? We're not just going to blindly get in at a level. So let's just keep on going here real quick.
So what value do I see in this in terms from a technical view? There's a gap that's waiting to fill, checking out the previous closing price, the PCP strategy at $1.90.
You know, just a very oversold gap on Sava at $1.80. It was recently at $8 during the COVID times, right? But yeah.
You can see once it hit $1.90, the low of this is at an average cost of $1.63. Once it turned that 190 into support, it was a phenomenal buying opportunity. And it still is, because as you can see, if you take a look at this chart, it closed the gap, it had a reversal, it turned this red line with the PCP strategy.
So if you look on the daily, it's turning that previous day's closing price into support, forming a higher floor. Very bullish daily candlesticks on the chart. Once it breaks above the resistance, there is no resistance. It's going to start to explode up to fill the gap that's waiting to fill above, right? So you guys kind of get the point in some of the basics, right? But anyways, man, how did I use this trading strategy to buy call options for a 100% profit return at the speed of light? Well, I'm going to walk you through some of the basics. Then towards the end of this video, I'm going to be giving you some new levels of interest where I'm planning to trade at heading into this week. So in terms of this strategy, these are things you're going to want to look for, right? So we're looking at gaps, and in order to tell if stock is a gap up, you're going to need to have the previous closing price indicator, the previous closing price. If a stock is opening up higher or lower than it's previously closed at, that means it's gapping up or down. It's moving during after hours, it's moving during pre-market, and then if it opens up higher or lower, it's having a gap, right? Now, like I told you, we are focused on reversals at specific gaps. I'm not interested in playing for reversals at every single gap. It's only specific ones. So this video is going to give you a better understanding on what it is that I'm looking for, right? So you can see right here on the daily chart, this is resistance at 529. Once the SPY had a gap up, you can see the empty space. This white line is the previous closing price, which means that's the previous day's closing price. So this white line is the closing price of this daily candle. And you can see it had a small gap up, but once it broke above this resistance, it ended up having a massive gap and go and a massive move to the upside, creating a massive bear trap. So once we gapped up in the previous closing price, 528.39, right? Once we gapped up from this level, this 528.39, the SPY had a massive bear trap. The SPY broke above this resistance. The SPY created a massive bear trap. The SPY had a massive move to the upside. So that's what you're going to want to look for. When you see a stock gapping up, you want it to quickly have a massive move to the upside. I'm showing you how to use it on the long side. You can use this strategy on the short side too. In this video, I'm showing you how to use it on the long side, right? This can get very advanced once you know everything it is about trading. So in terms of the overall foundation, The SPY had a gap up. The SPY broke above a resistance level. The SPY had a massive move to the upside in one singular day, which is exactly what you want. You want massive moves to the upside in short periods of time. Now, we don't know when this gap is going to fill. Now, there's ways and there's other strategies to confirm when this gap is going to fill. We're not going to be going over that. There is ways to confirm when this gap is going to fill. And once you have those confirmations, you can buy put options. We're not going over that. We're sticking to some of the basics here. We're sticking to one simple trade that I ended up making. I'm going to break this down for you, right? Why I bought these SPY 532 calls at 78 cents and sold them at 127 cents, right? So SPY had a little gap up, right? It doesn't have to be a massive gap up, but if it's a small gap up, you want it to be a massive move, right? The point is you want an overreaction to the upside. So we got an overreaction to the upside. It happened in a day. So if you were to measure the overall day's move, 528.50 to 534. What does that mean? That means when the SPY drops back down to fill this gap, if it does have confirmations of a reversal, it can quickly spike, if you measure the move, to 531, where it closed on this day, or even 534. That's how you measure the move in a singular day's worth of price action. But let's get into a more advanced part of this strategy. So you can see SPY ended up gapping up, and it just kept on going up for about a month straight, new all-time highs from June 4th all the way to July 16th, right? So like 5-6 fucking weeks, right? This had a massive move to the upside. This went all the way from 529 to 565, right? A little bit over a month. Now, look at how quickly SPY lost its gains. This went from 554. Remember I told you to buy put options at this gap? There was a red bearish 30-minute confirmation. Did you buy put options once that red bearish 30-minute confirmation closed after filling the gap? The 30-minute chart, it closed at 550, and the red 30-minute candle formed at 554, right? Had a massive sell-off. Could have made bank on the put side playing for this gap that was waiting to fill below. But let's stick to the overall strategy, right? The point is the SPY lost the bulk of its gains in a quick period of time, right? So this went from 555 all the way down to 528.50s, filling this gap in 2 days. So in 2 days, the SPY lost the bulk of its gains. How long did it take from SPY to go from 528 to 555? Well, if you look right here, it took from June 4th all the way to July 5th. It took 1 month for SPY to go that high. So in 2 single days, it loses 1 month of a measure moves price action. That means that it's going to be a great opportunity to play for a gap close reversal because it had an overreaction to the downside. So if you're seeing a gap up and you're seeing a massive move to the upside, and in this situation, it took the SPY a month to get that high. You're telling me in 2 days, it loses a month's worth of overall measure move of overall gains? That means it's likely going to have a reversal. That's a great confirmation for a reversal. We call that an overreaction. SPY had an overreaction to the upside. If it has an overreaction to the downside and it loses those gains in a quick period of time, just as fast as it went up, or even better, quicker than it went up, fucking 2 days, it's likely going to have a reversal. It's due for some sort of bounce, right? So use that to your advantage. Use those overreactions. You have to measure the time. A month's worth of gains gone in 2 days. What do you think is going to happen? Don't you think it's going to start to bounce at the gap? Don't you think it's going to start to reverse at the gap? Don't you think it's going to start to explode up to fill the gap that's waiting to fill above at 543? Remember how I told you to buy call options at 537? Did you watch the video? Did you buy the call options at 537? Remember how I told you 537 was an oversold gap, key resistance, had a massive gap up, went all the way to 544. We're in an oversold bullish market. So as you can see, the SPY lost the vast majority of its gains in 2 fucking days. And on this day, it reversed at 537 and had a 10-point move to the upside. A 10-point move to the upside, man. If you would have bought call options at 537 towards the lows, you could have made a 10-point move on the upside. Buying cheap out of money options, you could have made 1,000% return just on that 1 day alone. Here we are again. History is repeating itself, man. So you have to ask yourself, why? Why come they aren't teaching you this, man? Why come other traders aren't teaching you this? Because they don't have the third eye. They didn't create this unique trading strategy. They don't know how to view the market the way I view it. So with that being said, man, I'm teaching you how to fucking win. Now, I showed you how to identify that it was a good level to buy call options. I showed you how to what we look for in terms of the level. We're looking for an overreaction confirmation, right? So those are reasons leading up to why it's likely going to have a reversal and why we're going to be very interested in buying call options at that level. Like I said, we're not interested in buying call options at every single gap that's waiting to fill below. No, we're far more advanced, man. We are looking for certain things, overreactions, big loss of gains in a short period of time, gaps that are waiting to fill above, SPY reverses at the gap right here at 528, right? And then it starts to explode back up to fill the gap that's waiting to fill above at 543. Just like right here, there was a gap to fill below at 537. SPY reverses at the gap, it starts to explode back up at 554. Then when it fills the gap at 554, it has a reversal, right? So I showed you what it is that we're looking for in some of the basics, very simple. Now, how can we actually confirm that it's going to have the reversal? So basically what I kind of showed you in some of the basics, I'm not showing you everything, but in terms of some of the basics, I'm showing you what gaps I'm looking for, what gaps I'm targeting, and overreactions. You know, a big confirmation that I'm using to play at that level is an overreaction. Like I said, if it took 4 fucking weeks to go to a certain level from the gap, and then it loses all those gains in 2 days, or a week or 2 weeks, that's an overreaction to the downside. That's going to be a great opportunity to potentially play calls, right? So those are some of the reasons, those are some of the things that I'm looking for, right? A big loss of gains in a very quick period of time, a lot quicker than it went up, an overreaction to the downside. Now, how can we confirm that it's going to have a reversal? So this is a trend reversal strategy. What I showed you was I showed you a foundation. I showed you how to identify a level. I explained to you some things that were interested in leading up to that level for a potential reversal at the gap, because I'm not interested in just buying call options at every oversold gap, even if we're in a bull market. That's not my interest, right? So we got the overreaction to the downside. Now, let's talk about confirmations. So in terms of confirmations, what I'm going to do is I'm going to show you the exact confirmations that you could have used to profit on call options with this unique trading strategy. So for those of you who watched my last video, we discussed this trend reversal confirmation on the 30-minute chart. Well, the same trend reversal 30-minute confirmation formed. The only difference was it was just green this time, but it's literally the same fucking candlestick at the gap. So on the 30-minute chart, we're using the 30-minute chart to confirm if a stock is going to have a short-term reversal as a day trader, right? In terms of swing trading, in terms of more longer-term stuff, we're using the daily chart, we're using the weekly chart, we're using the monthly chart. In terms of day trading, the main core focus in terms of the foundation on an overall scalp is going to be that 30-minute chart, right? So you can see, same 30-minute candlestick, same 30-minute candlestick. What does SPY do? It goes up for an hour, it goes up for an hour. A short-term trend is repeating itself, a short-term trend is repeating itself. So once this 30-minute candlestick closed bullish here, you could have bought call options. Now, when you are trading options, you do not have to be the first person to capture a trend to make the biggest percentage gains. You can be the last person in the market to capture a trend if you use options and if you are buying cheap, far out of the money options. How is that possible? You could have made more money buying call options later in the day when we did versus buying here. How is that possible? Well, one of the reasons is the time of day, man. During this time of day, the moves aren't going to be as volatile during the middle of the day. The biggest moves are going to be towards market open. But at market open, the market just opened up. The contracts could be very expensive. The market literally just opened up unless you're going super far out. The advantage to the market open is it's a very lucrative time for a lot of volatility. But in a certain situation, you might have to go further out. And in terms of market open, you might have to hold a lot longer to make decent percentage gains if you're going further out, right? So in terms of the middle of the day, it's going to be more choppy. The moves aren't going to be as big as times, right? Now, in terms of the point that I'm making, Power Hour offers the biggest percentage gains. Power Hour starts at 3 p.m. In terms of when we trade SPX, it's at 3:30 p.m. We haven't been trading SPX during that time lately because the contracts have been extremely high. We're in such a volatile market with very big overreactions. So I've mainly just been focused on SPY, but once SPX becomes cheap again, I'll be more focused on SPX after 3:30 p.m. That is the only time we trade SPX. But the point I'm trying to make is, if you are trading far out of the money option contracts and you are trading towards the end of the day where big volatile moves are happening, the contracts are going to be decayed. They're going to be decayed. They're going to be a lot cheaper. The 0-to-8 options are getting ready to expire worthless. So what we're doing is we're playing for a big move within our 30-minute favor, 3 p.m., 3:30 p.m., last two 30-minute candles before the close, right? We're playing for a big move in our favor with these overall unique trading strategies, right? And they're so cheap, they're so low risk, and they offer the biggest percentage gains within the market. So in terms of the point I'm making is you don't have to be the first person to capture a trend to make the biggest percentage gains in the market and have the lowest risk. So you could have bought call options right here. If you used the strategy, you could have bought call options on the opening of this 30-minute candlestick. I was close to buying call options in this particular situation, but I decided to wait. Now, in terms of where I decided to buy call options, it was right here. As soon as this 30-minute candlestick was getting ready to close, I decided to buy call options. Why? This is why. The SPY was reversing at the gap. It had a bullish confirmation at the gap. Trend reversal candlestick, trend reversal candlestick. The SPY went up for an hour, the SPY went up for an hour. So I noticed that a pattern was repeating itself. So then I looked at this pattern, man. I'm saying the same patterns repeat itself. Trend reversal candle, trend reversal candle. It's at the gap, it's at the gap. An hour straight slanted right to the upside, an hour straight slanted right to the upside. And then look what it did. 3 bearish candlesticks slanted to the downside. 3 bearish candlesticks slanted to the downside. So when I'm seeing this candlestick and I'm seeing that this, candlestick is about to close red and bearish, I'm thinking to myself, dude, this is higher support. We're about to have another bullish move and another reversal if history repeats itself, man. It's having a continuation of a gap close reversal. This previous resistance right here is reacting as support. This pattern has been repeating for 30 minutes, 60 minutes, 90 minutes, 120 minutes, 150 minutes, 180 minutes. Look at this, man. 30, 60, 90, 120, 150, 180. Did you see the market like this in real fucking time? We call this out in real time. 100% alerted in real time. We're buying the most lucrative contracts, the cheapest contracts, the lowest risk, man. Previous resistance is reacting as support. What's the pattern? Gap close reversal. Bullish move to the upside. Bullish move to the upside. 3 red slanted to the downside. 3 red slanted to the downside, man. I literally explained to everyone why I got in. SPY filled the gap from 528.39. It has formed a 30-minute trend reversal candlestick at the gap. It's been reversing since. Previous resistance before the breakout was 530. As you can see, previous resistance right here before the breakout, the high of this was 530. SPY to breakout, it's forming a higher floor for basically an hour fucking straight. And if you just look at that pattern, man, you had look at this fucking pattern, man. This is flawless. Trend reversal, trend reversal. 2 greens at upside slanted, right? It was slanted right to the upside, right? So the slant is right to the upside. Like I said, this has to look identical when you're looking at these patterns. And then 3 slanted red, and then big bullish move. Same fucking thing repeated, man. How many fucking times, do you need? This is so simple. You just have to have your third eye open. You have to be able to capture these patterns in real time. So do you see everything it is that I stacked to come up with the trade? I'm stacking the gap reversal. I'm stacking the 30-minute foundation. I'm stacking double green slanted right. Double green slanted right. History's repeating. 3 slanted red. 3 slanted red. And then it has a bullish move again. And then it has a bullish move again. Don't you fucking see how simple that is? And then this previous resistance right here reacts to support. Why would it react to support? Because the SPY's having a gap reversal. Because the SPY's breaking out. Because when that previous resistance is supposed to react to support, because SPY's having a gap reversal, SPY's breaking above. When it drops back down, it's going to react to support. How can you confirm that? You can use patterns. You can use patterns to confirm that this previous resistance is going to react to support. 3 slanted fucking red. 3 slanted fucking red. Starts to go bullish again. Previous resistance reacts to support. Very normal to break above fucking resistance and then drop back down to turn into fucking support. It's a great, phenomenal opportunity. So, like I said, you don't have to be the first person to capture a trend to make the biggest percentage gains in the market. The person buying here made much bigger percentage gains, especially if they went with far out of the money option contracts. Gio had a trade on calls right before this. He made 200% at the speed of fucking light, man. We were thinking exactly alike on this particular trade. So, anyways, man, I hope that opens your eye up in terms of the patterns. So in terms of confirmations, I'm using 30-minute patterns. I'm using 30-minute charts. I'm going back throughout the 10-day, 30-minute chart. I'm looking for very specific patterns on this 30-minute chart. It's going to help dictate the next 30 minutes worth of price action. You can just see right here, man, if that pattern continues to repeat, SPY can go up for 90 minutes straight. SPY can have a massive move up. But it's just common sense, man. The SPY had a gap close reversal. That's bullish. The SPY had a breakout. That's bullish. And then if it drops back down to that previous resistance right here, it's likely going to react to support. And then if you just use the patterns that we go over, man, you have to look for these 30-minute patterns. Trend reversal. It's at the gap. Gap reversal. Green slanted right for an hour straight. Green slanted right for an hour straight. 90 minutes, red slanted to the right side. 90 minutes, red slanted to the right side. Previous resistance, reacts to support. Bullish uptrend after the 90-minute slanted red. I literally explained all of this, man. 3 slanted red pattern, which could mean bullish reversal. But it was already having a bullish reversal because it already reversed at the fucking gap. It already had a breakout. So if it drops back down, it's probably going to turn that previous resistance at 530 where the bears got trapped for a massive breakout to 530 fucking 4. It's like they're going to react to fucking support, man. You see how fucking simple that is? 528.60 to 534. If you would have measured this fucking move and went back to the daily fucking chart, you should have hit a home fucking run on Friday, man. You should have been in on fucking calls towards that gap, and you should have been looking to scale out towards where it told you to scale out, which is the closing price to the high of this fucking day, measured a move, man. But the point being is, man, the point I'm making is, man, you can use these strategies and just capture these trends towards the close when the contracts are cheap, when the contracts are worthless, when they're getting ready to expire worthless, and we're buying them out of the money. A big move goes in our favor on a 30-minute candle, right? We sell in the money for the biggest percentage gains. You can make more money waiting later to catch a trend. And one of the ways I look at it as well is I kind of look at it as well. It's even better to wait. Why would it be better to wait later? One of the reasons why it's better to wait later to catch a trend instead of trying to be the first one to capture it here is simply because there's more confirmations. Yes, SPY's reversing out the gap and it's having a big move to the upside, but it just filled the fucking gap. It just had a quick, sharp little reversal. If you wait for better confirmations, so in terms of that would be the first person to capture a trend. If you want to be the first one to capture a fucking trend, you can use that 30-minute chart. If there's a trend reversal candlestick, you can get it on the calls. That's completely fucking fine, man. But if you want to capture it later in the day with a better confirmation, you can wait for it to break out, and when it drops back down, that previous resistance reacts to support. And another reason why it's better to wait later into the day is these contracts that we're buying, the cheap, far, low risk, out of money option contracts, they are so fucking cheap during power hour. And power hour is a much better time to trade versus the middle of the day. At the middle of the day, some days you're going to have big moves, some days you're going to have small moves. During the power hour, almost every single power hour trading session, just like in the market open, you get big, massive moves. Except the difference between market open and power hour could be, in power hour, you can make the biggest percentage gains in the quickest period of time, especially with these SPX contracts, man. If you're trading at market open to make some serious gains, you're going to have to hold a lot longer, and you're going to have to go much further out if you want to make bigger percentage gains. But in power hour, the contracts are literally getting ready to expire worthless. So another advantage is you don't even have to go too super far out, and you can hit a quick scalp in 10 minutes for multiple 100%. I mean, you can hit a scalp in 20 minutes, 30 minutes for fucking 1,000%, thousands of percents. But that's some of the basics in terms of those call options. And then I sold the move, man. So I got in at 2:23 p.m. and the move came in quick. I sold into the move in 7 minutes. I made nearly 100% profit return. And then after that, the winning didn't stop there, man. We had people crush it on that fucking play, man. But the winning didn't stop there, man. In terms of the winning, it just keeps on fucking happening, man. You guys are well aware that every single day is my best trading day these days. And if you just look at the fucking trades, man, every single fucking trade was a win, man. SPY, 532 puts at 88 cents a contract. Bought these puts at 88 cents a contract, and then I ended up selling these puts at the speed of fucking light at 129 a contract. This is all alerted in real time. Every single trade we make is alerted in real time. We buy cheap far money option contracts, very low risk, biggest percentage gains in the markets, right? So that's the second win on the fucking day. Now, in terms of the third win, I'm going to go over this one real quick. Let's see. In terms of the third win, man, I ended up buying calls. 532 calls at 65 cents a contract at 3:43 p.m. It's all alerted 100% in real time. And these calls ended up selling at the speed of fucking light, 3 for 3. Those calls was a very nice win. that was at 65 cents a contract. I ended up selling in the 83-cent range. And then in terms of the fourth win on the fucking day, it was on puts. 532 puts at 95 cents a contract. And then I did another strike as well while I was in that first strike. 531 puts at 42 cents a contract. If you see me do 2 strikes at once, odds are that second strike is going to be the best fucking entry possible, and it's going to be a big percentage gainer. So I'll typically look to size in a little bit bigger on the second strike as well. But both the strikes work, man. In terms of the first strike, that was 4 for 4. I ended up selling that one. I think at 150, and then the second one was sold at 80 cents for 100% profit return, man. Non-stop fucking printing. And then the fifth one on the day was these SPY calls, 39 cents a fucking contract. Ended up exiting these at the speed of fucking light at 59 cents a contract. So with that being said, man, in terms of the levels that I have for tomorrow, this is going to be very simple. The market right now is having an overreaction to the downside. You guys are well aware, there's been so many phenomenal dip buying opportunities. If you use my strategy the proper way, you identify the right key levels, you use the right confirmations, right? So in terms of the market right now, you could see we closed at 532.90, and we're having a massive move to the downside during extended hours. So this means that the option contracts tomorrow opening are going to be very high. They're going to be very priced in, which is another reason why we haven't been trading SPX lately during 3:30 p.m. because they've just been so fucking high. We've just been trading SPY. In terms of the market volatility is fucking insane right now. It's absolutely fucking insane in terms of the bull traps and bear traps that are getting created. So one of the best things you can focus on as a trader with this extremely high volatility that can really crush a lot of fucking traders who don't know what the fuck they're doing is to really just focus on the bull and bear trap levels, the best levels possible. Especially with the contracts, they're going to be priced a lot higher. You have to adjust. So you have to adjust and be aware within the market. You have to understand that contracts with these big volatile moves, they're going to be priced higher. And we're not going to be trading SPX towards 3:30 p.m. We're going to be trading SPY until SPX becomes fucking cheaper, right? So you have to adapt as the market's adapting. And like I said, when the market is having these crazy volatile moves, it is best to wait for the bull and bear trap levels. So let's go over what it is that is going on from a technical point of view, right? In terms of a technical point of view, we had a gap at 528.60. Once we filled the gap, the SPY had a reversal. Last time this occurred, the SPY had a reversal and it quickly shot up to 534. So a lot of similarities have happened. And then you could see the SPY, just kind of chopped up for a couple days. Then it continued to push higher, right? So what you need to be aware of is there is a gap that is waiting to fill above at 543. And the SPY did have a reversal and it did attempt to start to fill the gap that's waiting to fill above. Now, in terms of this make or break level, which is going to be a high level of interest that you should be focusing on, is this 537 level. I made it very clear in the last video that I posted. If we go under 537, I made it very clear. If we go under 537, if there's a red bearish 30-minute confirmation after 537, the bulls are going to get trapped and the bears will be in complete control. I made it very, very clear, and we're going to see a very nice 4-point drop minimum. So for those of you who listened to the last video, if you would have just put options right here, when this closed, it hit 537, so it hit our level, and then the 30-minute candlestick closed. So understand, if you're using the 30-minute candlestick closing confirmation, it's not going to get you in at the key level all the time. It's going to be at a different level. But if the 30-minute confirmation closed at our level, that's confirmation to get in on the opening of the next 30-minute candle. So if you would have just simply followed the game plan, you would have been in on put options right here at 534 using the overall game plan that I gave you, which was to buy put options once the SPY forms a red bearish 30-minute confirmation at under 537, the bears will be in complete full control, right? So in terms of where we're at, this is what I want you to understand in terms of day trading, right? The SPY had a reversal at the gap. It started to go back to the measured move towards that 534 level. Now, this is what you need to understand. 537 is make or break. So 537, when it reacts as a bullish level, we quickly spike. And in terms of what's going to happen is, once you see a breakout or a gap above 537, we're going to explode up to fill the gap at 543. So when we go to 537, if you are seeing a breakout, a green bullish 30-minute confirmation, a gap up above 537, and it's towards that level, and you're seeing a green bullish 30-minute confirmation, you're going to want to buy call options because then it's going to start to explode back up. Last time on the same day went to 547. This time, we're going to say it's going to go to 543 and close the gap. So that's going to be your make or break level. 537, whenever that decides to react to support, it's going to explode up to fill the gap. I'm telling you, if you are patient enough to use these levels and to trade at these levels with the confirmations that I'm teaching you, right? So you're just simply looking for a support confirmation. You're looking for support to form above 537. You're buying calls. You're riding it back up. You're selling into the move. You're setting profit stops. You're not going green to red. You're getting stopped out for profit. Inside of Team Roar, we don't even use stop losses because the contracts we buy are so cheap and so low risk. We don't use a stop loss. We can just hold the contracts later in the day. They can go back to in the money. And if it goes to zero, it's not going to hurt our accounts. We're putting in the most we're willing to risk and the most we're willing to lose. We're comfortable with the contracts going to zero. And we have such high win rates and plenty of the dead plays. I would say 70% of the time, the dead plays that drop 50, 60, 70%, they go back in the money for a bigger win later on, for a nice win later on to the end of the day, right? So if 537 reacts as bullish, a nice breakout, you're buying call options right up to 543. Once we get to 543, if you're seeing a red bearish 30-minute confirmation, you're buying put options, you're riding it back down to 538. Save those levels. Gap close reversal 543, and then 537 make or break. If 537 is maintaining, reacting as a resistance, forming roof, forming red bearish dojis, red bearish 30-minute confirmations, trend reversal 30-minute confirmations, forming a nice ceiling on the 30-minute chart, you're buying put options, you're riding it back down to 533. So you're well aware, best levels, 543, 537, 533. Now, 533 is a gap. What I want you to understand about this gap is this is like a middle gap. This gap is towards the middle, man. So if we break down this overall chart, this 533 level is like that make or break. If it reacts as a resistance, red bearish 30-minute confirmations, we're going to 528. If it reacts to support, we're going to 537. So that's like your make or break middle level. We're going to keep an eye on 533 gap, make or break middle. Now, in terms of what we know right now, the SPY is having a massive gap down. So the SPY is having a massive gap down. With that being said, this is one thing you can look for heading into tomorrow. If we get an overreaction to the upside early into the week, look for put options at 533. So understand, the people who decided to swing trade, they got trapped. And they got trapped very, very badly. This went from 533 to fucking 524 at the speed of fucking light. So within the next 2 days, if the SPY goes up to 533, you're going to want to look for a red bearish 30-minute confirmation. You need to understand the initial reaction, the most likely reaction, the most likely outcome would be a drop from 533 if we can just quickly rock it back up, because the bulls got trapped at 533 and had such a massive drop. So within the next 2 days, if we can just spike back to 533, it's likely going to drop burst. It's likely going to be a great opportunity to scalp put options. Use red bearish 30-minute confirmations. So the best thing you can do as a bear in this market is to buy put options at 533 if you're seeing a red bearish 30-minute confirmation. But like I said, you want it to happen quickly. You want it to happen quickly. Overreactions are real, and overreaction would make it much more likely that it's going to reverse at 533. So if in a couple days we can go to 533, try puts at 533 with a red bearish 30-minute confirmation. Remember, if you are using the confirmations, you're not going to be getting in at the key level at all the times. The confirmation can hit at the level, but the 30-minute candle is going to close at a different level, and that's okay. You can just buy towards the opening. You can buy towards the opening of the next 30-minute candle. The red bearish 30, like I said, man, very simple. I told you if 537 cracks in the last vid, bears are going to be in complete control. Write it down to 534, 533. That's literally what I fucking said. So the point is, 537 fucking cracked. There was a red bearish 30-minute confirmation closing right here at 534. So you're not getting in at 537. You're getting in on the opening of this 30-minute candlestick at 534. Sometimes there's going to be a red bearish 30-minute confirmation at 537. Sometimes there's not going to be. So you just get in. You get in on the opening. You understand? So 533, red bearish 30-minute confirmation, trend reversal 30-minute confirmation, buy put options. And in terms of where you can write it back down to about 530. 531, 530. And like I said, set profit stops. No fucking excuses, man. For those of you holding for the bigger wins, you like big fucking gains. You like buying cheap, low-risk contracts, making the biggest percentage gains, right? For those of you holding a little bit longer, you like the best fucking trades, right? Set your fucking profit stops, man. Set your profit stops, man, so you do not go green to red, right? So just set the profit stops. And the contracts are so fucking cheap, you don't need a stop loss. We're not buying in the money option contracts, just selling for a small little gain. No, we're trading the best way to possibly fucking trade at. We're going far out of the money option contracts, cheap, low risk. And another advantage to those contracts is you don't need a stop loss. They're so fucking cheap. You can just hold them the entire day and they can go down 50, 60, 70, 80%. You're not stopped out because the most you're willing to risk is if they go to zero anyways. And they can come back to life later in the day. A big move can come middle of the day. A big move can come during power hour. Goes in the money. You're selling for fucking profit, man. So anyways, man, in terms of our next level. So I gave you the game plan for overall puts, man. Now, what is the game plan for calls? Is there any level for calls? Right now we're at 525. Let's see. Let's go back throughout the daily chart. Let's see. Is there any levels I'm keeping an eye on here that we're close towards? 522.58, 520. Okay, so yeah. If you look at the daily chart, now what I'm showing you here, this is nothing special. So there really is no special, amazing strategy to this. This is just something to keep an eye on. You could say this is a nice level though. 525 and 522. Now the reason why I'm saying 522 is nicer is because of this. This went from 522 all the way to fucking 529 on the same day. Plus it's more of an oversold level. So in terms of call options for a scalp on calls, you can look for a green bullish 30-minute confirmation at 523. It should try to bounce there first. You can keep an eye on 524.90. That's make or break. I can care less about it, but you can keep an eye on it. That's an overall bounce zone. Just know what I'm showing you there. That's not like some special strategy. There's nothing really special about it. It is just a nice little move to look for where it can potentially bounce off of initial reaction because, 522 wasn't tested and it had such a strong move to the upside. Once it was at 522, it went to 529 the same day. So if you're seeing a green bullish 30-minute confirmation, like I said, whatever it is that you use as a trader to confirm that a stock is going to bounce, to confirm that a stock is going to have a reversal, right? But in terms of like a really special level, it's not that special, but it is interesting to see that it went from 522 to 529 at the speed of fucking light. But no significance. No significance. What I'm telling you is making these fucking videos right now. No significant levels on the long side making a day before a night advance, right? But on 522.80 and 525, you can keep an eye on, especially that 522.80, right? So we use a very special skill set and a very, special stock set of strategies, right? This gets very advanced. For those of you who want to learn more about it, for those of you who want to trade with us inside of our secured private organizations, you get access inside of my secured private organization. You get access to all of the real-time trade alerts. So every single time we enter a trade, every single time I enter a trade, every single time GROR enters a trade, you get access to all of the real-time trade alerts, man. Literally almost every single morning. We're green. Almost every single morning we're green inside of Team Roar, man. Just on Friday morning, we absolutely crushed it, man, on the NVIDIA calls. Take a look at this trade. I'm going to walk you through this here real quick. Let me show you real quick. So if we go back to the trade in the morning, so every single morning you do get a market game plan with levels as well. So understand we have new levels during the morning as well. We have new levels when the market is open. There's 3 levels to do sessions. That you can do levels when the market's closed, during extended hours, during pre-market, and when the market's open, there's new levels, right? So this video, the purpose of this is to educate you, to recap the trades, and also to give you new trading plans to make money, right? You should be able to make money using these trading plans if you know how to trade and you know how to use confirmations at these levels, right? So in terms of the morning trade, it was on NVIDIA. Look at this. NVIDIA. We had a trade on NVIDIA puts for 43 cents. And then we had Amazon puts for 57 cents. These fucking Amazon puts went to 180 at the speed of fucking light, man. Then we had a play on SPY calls that went up 200%. It's nonstop fucking winning, man. And you guys know my main focus is going to be during the power hour trading session. That's just personally when I trade best. Also, if you were to just think of optimizing a trading strategy, if you wanted to optimize for a trading strategy, the best trading strategy you can optimize for is the one that has the lowest risk, the cheapest barrier to entry, and the biggest percentage gains. That's the one you can optimize for, because with that strategy, you can be successful with the lowest win rate in the game. And part of trading is to figure out how to be successful with the lowest win rate first, and then you scale your way to increasing your win rate. So what we do is we figured out how to become the best at the hardest way possible to trade, which is to buy cheap, far out of the money option contracts, 0 to 8 options that are further out of the money option contracts. And we sell them deep in the money for the biggest percentage gains, and they're extremely low risk because they're cheap contracts. We do not use stop loss because they're so fucking cheap. If you can't afford to risk $50 to make 100%, 200%, sometimes 1,000% during power hour, then this isn't for you. If you can't afford to risk $50 to make $150 to make $300 on an SPX play, you can risk $50, $100 to make $500 to $1,000. If you can't afford to risk that, then just don't fucking trade, because we're not using stop losses on these overall trades, right? And obviously, the bigger your account, the more contracts you can fucking buy. But this is the lowest risk strategy for the biggest percentage gains. We're buying cheap fire limit option contracts. And like I said, if you do this during power hour, it gets you in during an extremely volatile time. So it gets you in during a time when the contracts are getting ready to expire worthless, when they're decaying at the speed of fucking light. And if you know how to time them well, you know how to use the 30-minute candlestick strategy to play for a 30-minute closing candle from 3 to 3:30 or 3:30 to 4 p.m., you can make the biggest percentage gains, and you can outperform anyone trading before then. There could be people getting in at much better prices than you, but they sell too quick for a small little gain. They're not holding for the biggest percentage gains, or they're not trading during the best time to trade. You have to understand, when you're trading options, it's a lot different than trading shares. There's certain times you can trade where you can be the last one to capture a trend during the power hour. You make the biggest percentage gains within the market. And during power hour, the contracts are so fucking cheap. Of course, they're going to be fucking cheap. They're getting ready to expire fucking worthless. So if we can identify with very little time left on the shot clock, which contracts are the furthest out of the money that are going to go in the money before the market closes, well, we can buy those pennies on the dollar and sell them biggest percentage gains within the market. So it's a great strategy to optimize for, and you don't need a high win rate with this overall trading strategy. But like I said, we have the highest win rate in the game with this overall trading system, man. So it's a real-time options trade alert system. If you want to gain access to it and trade with us, it's going to be the first link down below within the description. You're gaining access to a market game plan every single day during the morning session. You get access to a game plan. You get access to morning trades. You get access to trades during the middle of the day at times. The core focus is going to be the best setups to those prices. The core focus is going to be that morning session and that power hour trading session, but we do have trades during the middle of the day as well. But in terms of my core focus, like I said, as a trader, is the power hour trading session, because we figured out a way to be the last person to capture trend. Like I showed you, man, I was literally the last person to capture the gap close reversal. But there's steps to a gap close reversal. You can say, you know what, SPY filled the gap, it closed trend reversal on the 30-minute chart, let's buy call options. You can do that, and you could play a gap close reversal, or you can do this. You can do this as well. You can say, this is the more advanced way of doing things. So you can say, SPY closed the gap, 30-minute trend reversal confirmation. Let's buy call options on the opening of the next 30-minute candles, right? You can do that, or you can do this. You can say, trend reversal candlestick, trend reversal candlestick. Green slanted hour straight. Green slanted hour straight. Break above resistance, break above resistance. SPY's having a reversal. SPY's having a gap close reversal. SPY's breaking out. 3 slanted red, 3 slanted red. Bullish move, 90 minutes, bullish move, right? You can wait later for a breakout. You can wait later for more confirmations that the trend is going to continue. I think if you wait later, it's more safe, because you have more confirmations. You have more confirmations that, the trend, it's not just having a quick reversal. It's actually going to last. It's actually going to keep on fucking going. And it's going to keep on fucking going during the best time to trade, when these contracts are very cheap, very low risk, getting ready to expire worthless. But if we can get a nice green bullish 30-minute confirmation on these fucking calls that I bought for a speed of fucking light, 100% profit return. Remember? We bought calls fucking twice for the gap close reversal, for the previous resistance reacting as support. Previous resistance reacting as support. And I play puts the fucking peak, man. So many fucking wins, man. Look, it's non-stop fucking winning, man. You want to win? You want to learn how to fucking win? You want to win non-fucking stop? First link down below within the description. It's the first link down below in the description. If you want to join our secure private organization, you want to get access to non-stop winning, buying cheap VAR out of the money option, low risk contracts. We're selling them deep in the money for the biggest percentage gains. We're using the unique trading strategies that I've created. Some trades We're simply using intuition. We're simply using heart of cards, man. You could stack everything, man. Stack everything. Stack the heart of cards, stack intuition, stack the patterns, stack the 30-minute chart, stack the daily chart. So, this video, I hope it helped dissect the trade. I hope it helped dissect how to fucking trade, how I see the market, how I see the overall market. This is how I personally see it. For those of you who've been following me for fucking years, you are well aware I'm the one that created all this. But yeah, man, with that being said, if you want to be a part of the real fucking deal and you want to buy cheap VAR out of the money option contracts and sell for the biggest percentage gains within the market for the highest win rate, it's the first link down below within the description. We will see you guys tomorrow. And this video, it should have helped you, open up your third eye. It should have helped dissect the overall chart. It should have helped you look at market structure. It should have helped you identify key levels of interest to buy puts. It should have helped you identify key levels to buy calls. And remember, at these levels, man, you need to use confirmations of reversals. You need to use confirmations of support. You need to use confirmations of resistance. The best overall confirmation that I've been using is the 30-minute chart, the 30-minute patterns, the daily candlesticks. You got to use intuition. You got to use the heart of cards. But it's the first link down below within the description if you do want to get involved with my secured private organization.